All right, welcome back. This is Module 11 of the Fix and Flip course. This is the last module that we're going to be going into, excluding any updates that we may add later on. But we are going to cover the sale of the property. So once you've gone through all the steps that we've covered so far in this class, you should have a beautiful finished product that you're able to put on the market. And that's what we're going to talk about in this section. How to appeal to buyers, how to make sure you sell quickly, and what to do if it doesn't sell quickly. So let's dive in. Now, like we do in every section, we've got to cover our disclosure before we dive into the content. I'm not a licensed attorney, accountant, financial advisor, real estate agent, real estate broker, or any other licensed individual. Even if I had a license, I'm not acting in that capacity on this education. Therefore, I won't discuss or provide any specific counsel, advice, or instruction that would apply to specific individuals. This workshop, this presentation, and this class is intended to be general information. I recommend that you engage the services of professionals in making decisions that have a legal impact, especially financial decisions. With that said, let's dive in. Let's talk even more about project management here. This is where we're going to talk about the listing. So once your product is complete, the contractors have cleared out, and you've done your final cleaning on the property, be sure that all of the items on your initial inspection are taken care of. So when you were buying the property, as part of your long analysis, you had an inspector come in and give you an inspection report of the property. Make sure that all of those problems are taken care of. If not, they will pop up when the buyers do their inspection. So just as a final, just wrapping everything up, make sure all those things are taken care of. Staging may be something that's important. Now, staging refers to bringing in furniture and decor to kind of give people a sense of how they can use the space in the house. Normally, you rent that stuff. There are professional stagers out there. Again, aces in their places. You didn't buy this education to learn how to become a stager. You bought it to learn how to become an investor. So you focus on the investing stuff. Bring a stager in to do what they do best, right? You may want to focus on doing a front room, the kitchen, a couple of the bathrooms, the master bedroom, and that's about it. You don't have to stage every room in the house. Just stage the important rooms, just to give them an idea of how the space can be used. Make sure that the staging company that you pick has recent and modern design trends in mind. So don't put stuff in there that looks like it was bought 10 years ago. Put stuff in there that looks like it was bought yesterday. Right? And staging doesn't need to be done on the low end. I found that, with low end demographic properties, you have such a big buyer's pool that the demand by itself sells the property. On the higher end, you want to make sure that for the mid-range and high end properties, probably staging is recommended. Mid-range, it's kind of that gray line where you may get away with it without staging. And you may want to use staging to try to move it a little faster. The nice thing about staging is it helps people kind of get their imagination going. Also, a lot of times it prevents people from nitpicking, right? Rather than having this big empty house where they can look and say, oh, well, that outlet cover is crooked. Do we need to fix that? And that outlet, and that whatever is off by a centimeter, that type of thing. They're more focused. Staging causes people to focus more on the space rather than the nitpicky details. So it's going to help kind of hide some crimes a little bit. Obviously I'm speaking in hyperbole here, but it's going to help hide some of the construction crimes. Drips and paint and things like that can easily be, have their attention pulled away with staging. So that's going to help with some of the little nitpicky stuff. But only necessary for sure in the high end and potentially in the mid-range demographics. Always use professional pictures. Don't go in and snap pictures with your iPhone or your Android phone. They just don't turn out as well as actually hiring a photographer to come in. And most good agents will offer that as a service just simply by letting them list your property. And I like to use agents because, again, aces in their places, right? I'm an investor. I'm not an agent. I'm not going to sit in a house for 5 hours on a weekend during an open house trying to sell a house. I'm out looking for other properties to pick up and run through my process. So I recommend hire an agent. And if that's what you're going to do, just make sure before you even buy the property that the numbers work for hiring an agent and paying them a commission. Make sure that the permits that you had to pull to do the project are signed off by the city. You should be getting Every one of those permits signed off, because that is a lot of times something that your buyers will ask, did you pull permits, and are your permits signed off by the city? So you want to get that certificate of occupancy that states that all your permits have been successfully closed. Don't ignore the final inspection. You're going to get a final punch list. Just plan on it. You're going to get a final punch list from your buyers. Don't ignore it. Make sure that you go through and you fix all the little things. Some of the bigger things are negotiable, right? I always end up negotiating on the final punch list when I'm selling a property, and I'll say, hey, I'll do these 10 things, but I'm not going to do these 3 things. They ask for a total of 13 things. I'll do 10 of them, but 3 of them I'm not going to do. And a lot of times, buyers are okay with that because you're giving them 10 out of 13. So don't pay contractors that last check until the final punch list is completed, and set that expectation up front. Also, don't give them the final check until you know that you have your W-9 form from them. And you can get those from irs.gov. That's something that we covered earlier on in the class in a previous module. Get a lien release agreement from each contractor. You can get just standard lien releases from sources online. I like going through an attorney because I like getting stuff that's specific to my needs. But as far as a lien release goes, just make sure that each and every contractor signs saying that they've been paid in full, and that they are not gonna hold any liens on the property, and that any liens that they do currently have on the property are hereby released by signing that document. Usually that's done in exchange for the final check. So you've got the final check and a lien release in hand. They sign the lien release, you hand them the check. That's how it goes, right? So with property maintenance, during and after the remodel work is done, make sure that you're mowing the lawn and watering the lawn. Make sure that the windows stay clean. Keep the dust down. Remember that while your property's on the market, people are coming through it and they're looking at it and they're getting their footprints all over the place, and people being in a location causes dust. This is kind of gross, but most dust is just dead skin. So I know that's really disgusting, but by the nature of people being in your house, in your property, it's going to cause dust. So make sure that you're dusting on a regular basis, that you're mopping and vacuuming. Maintain an appropriate temperature inside the property. Don't be cheap and turn the thermostat down to 50 degrees, especially if it's cold outside. Like that's going to deter people from their enjoyment while they're looking through the property. You want them to have the best experience possible because they're looking for their new home. This is where this was just a numbers thing for you. This is an emotional purchase for them. So you kind of have to turn that empathy back on, that emotion back on when you get to the point of selling the property. And remember that people are making an emotional decision, so make them comfortable inside of your house. If applicable for your area, winterize the house and the sprinkler systems. And then with staging the property, we talked a little bit about staging. You want to do kitchens, bathrooms, master bathroom, master bedroom, the main living area, one or two additional bedrooms. Make sure that the furniture and the decor all matches your color scheme that you used in the remodel, and make sure it smells nice. Use those little plug-in air fresheners. I've even heard tricks. I've never done this, but I've heard tricks where people put a little bit of cinnamon oil into the paint, and it'll make the house smell like cinnamon for years after the paint job. There's all of those little tips and tricks, but you remember that you're creating an emotional experience for your potential buyers as they're coming through your property. When you're working with an agent, make sure that the commissions are in your budget from the beginning. As you're running your quick analysis, I always factor in an agent commission on the sales side. That's usually 6%. So I factor in 6% of my ARV going to selling, towards the cost of selling the house in the form of agent commissions. Don't be a cheapskate. It burns relationships. It's okay to ask for discounted commissions sometimes, but not every time. Don't tell an agent that the only way you'll work with them is if they only take 1%. Respect your professionals, and they will respect you. Your agents are going to, just by nature, they've got their own financial well-being in mind. So they're going to pay more attention to their customers who are going to give them a full commission than they will to their ones that are going to give them a discounted commission. So I like to just pay a full commission and just budget for it from the very beginning, because it shows respect to my professionals. And the relationships are far more important than the money. If we look at the 5 currencies of the wealthy in order: time, knowledge, relationships, credit, and money. Relationships are more important than money. They will make you more money in the long run than if you burn your relationships to make an extra penny. So if you need to ask for a discount on commissions, be upfront about it. Talk to them as soon as you find out that you need to ask for a discount. Don't wait until after they do all the work, and then let them know that you can't pay their full fee. If you wait until closing to let an agent know that you need a discounted commission, they're not going to want to work with you again, because that feels awful shady, right? Let them know up front, and be very upfront about it. As soon as you know that you're going to need to ask for a discounted commission, let the agent know. Strike a deal with agents. I like doing this because it helps me find more properties. Now, if you watch the off-market properties on tap class, you know that we're not talking to agents to find properties. That's not our primary way of finding properties. We like to look for off-market deals, but it doesn't hurt to have a potential fix and flip thrown at you by an agent every now and then. So let your agents know that if they find a property for you on the front end, that you will let them list it on the back end for a full commission. So keep in mind, most uneducated investors are out there asking their agents for discounted commissions, and a lot of agents take the deal because of volume. But if you're willing to offer a full commission on selling the property on the back end, they're a lot more likely to bring deals that they find to you first, if you're going to give them a full commission on the back end, than to one of their other investor clients who is not going to give them a full commission on the back end. This is just a little strategy that I use to get extra properties coming my way. Just make sure that you account for the full commission in your quick analysis before you even buy the property. And then beware of selling to the wrong person. I've made this mistake before. You don't have to make it, because I already made it for you. Just learn from my mistakes. Don't accept the wrong offer. Just because it's a higher offer doesn't necessarily mean it's the best offer. So pay attention to certain things within that offer. Is the offer contingent upon the buyer selling their house that they currently live in? Because if you've got an offer on your property for $240 and another offer comes in for $230, but the $240 they've got to sell their property, they got to get financing. The $230 is, they've got cash, they don't need to sell their property. That's the better offer. The $230 is the better offer, because the chances are higher of the $240 falling out than if you have the $230. And after you wait for a month for them to work on their financing and all that stuff, and then they fall away, that $230 might have already found the house that they want and bought it, and then you're back to square one, right? So that's frustrating. Always look at all of the terms. Make sure that you review their financing situation. If financing is suspect, it's not a good contract. It's not a good offer. Get a pre-approval letter and reach out to the mortgage company to make sure that it's a solid, that their financing is solid, and that there's no chance of them falling out, or that there's little chance of them falling out. Low or no earnest money. Earnest money is an indicator as a seller of how serious or how earnest the buyer is about the purchase. If they put $500 or $100 or $0 on their earnest money, they're probably not as serious as someone who puts $5,000 down as earnest money. So, that can show you how serious that person is about purchasing your property, and may affect your decision, and definitely creates a higher quality of offer than someone who has little to no earnest money. And then if there's a lot of additional contingencies that are included in their offer, like, we'll buy your house, we'll buy it for your asking price, but we want you to put a pool in, and we want you to put a new garage door on, and we want you to repaint the whole house a different color, and we want you to tear out all the light fixtures and put in different light fixtures, that's obviously not going to work. So, just because someone offers a higher price, those add-ons may actually make you net lower than if you had just taken a lower offer with fewer contingencies. So make sure that you're aware of those items as you're reviewing offers from buyers, and always go with the offer that feels the best. At the end of the day, use your gut. If it's going to cost a lot more money and a lot more work for you to meet all of the requirements of the buyer, or a lot more time, then it's not as good of an offer as one that may have a lower price but better, but is just a higher quality offer. So very, very important as we review offers coming in from potential buyers. And then what do we do if our property doesn't sell? What if you did all of the things I said and you put it on the market and it just sits there and it doesn't sell for whatever reason? Have clear exit strategies in place before you purchase the property. What if you convert it into a rental? What if you convert it into a nightly rental? What if you convert it into a lease option? There is no shame in holding on to a property for a year if it's not selling. Lease option is a great option. We covered this early on, I think in module 2 or 3. There's no shame in taking an option payment and letting someone lease the property for a year while they get their credit in order, and then they execute the transaction at the end of their lease. Seller financing is another option. You just have to make sure that you've got the right structure on your financing in place in order to be able to offer seller financing. So did you structure your money right? Do you have equity? Well, if you use the debt equity blend that we talked about in the funding module, which was module 6, then most likely you've got the right structure in place and you're able to use a lot of these options that we're talking about. Now, you may have to replace the debt with more traditional financing in order to hang on to it as a rental. But if you've got the right mix of debt and equity for your financing, you should be able to go out and replace that debt with a 30-year mortgage because you've got that equity built in your partnership. And then you also may be able to replace, as an alternative, you may be able to replace the debt portion with new equity partners. So that's an option as well. But know your exit strategies and be comfortable with your exit strategy. It can be frustrating and paralyzing if you've got a property that's just not selling and your equity partners are starting to call you and bug you, and your debt lender's starting to call and bug you. Don't let that paralyze you. Always be willing to move to an exit strategy before the option of losing money, right? Don't drop the price below what you put into it and lose money on the deal if you can convert it into a rental and just hold on to it for an extra year, or a lease option, or any of these options. So exit strategies first before losing money. Because if you're doing it the way that I just taught you to do it in this course, then it's not even your money to lose. It's someone else's money. And we don't want to do that. Relationships are the most important thing. We want that money partner to look at the deal and say, you know what? We had some hiccups on that first one, but they knew exactly how to handle it. We ended up making more money in the long run. I definitely didn't lose any money. Now we've sold it. And you know what? Because of the way they handled that first one and we didn't lose money, I'm willing to go in on a second and a third and a fourth, etc. Relationships are the most important thing about fixing and flipping. So make sure you've got your your exit strategies in place to protect your equity partners, to maintain those relationships so that they will be your equity partners on many, many more deals to come in the future. All right, that puts us at the end of Module 11, which covers the sale. It also puts us at the end of the Fix and Flip course. Go out there, buy some Fix and Flips, follow the systems. The closer you stay to the systems that I've just taught you, the safer you'll be. Set these things up and execute them the way that you've just learned them, and build a real estate business at scale. Build your Fix and Flip business to a point where you can do 2, then 4, then 8, then 10 and 12 properties at a time, so that you can maximize the amount of income that you're making by using the strategies you just learned. I hope you're able to go out there and be successful with it. That is my true wish. So go do it, and I will see you in the next class.